Dear Pi pioneers, with my roots firmly planted in the world of distributed systems from my time at Stanford. As a technologist at heart, I've always approached Pi not just as a cryptocurrency project, but as a grand engineering challenge. How do we build a decentralized, mobile-first blockchain that empowers billions of everyday people while standing the test of time? Today, with our open mainnet live and public distribution underway, as I want to dive deep into a topic that has been buzzing in our community, Pi, S compliance roadmap. I'll explain the path we're on, why we're so committed to regulatory alignment, and what this means for Pi S future. This isn't tea light reading. Think of it as a detailed system architecture breakdown. But for compliance, we'll cover the nuts and bolts, the rationale, and the long-term implications. Buckle up, pioneers. Let us engineer this conversation together. First, let us map out the compliance route Pi network is navigating right now. From day one in 2019, when Chongdiao fan Vincent McPhilip, who later moved on, and I launched this, we knew compliance wasn't optional, it is the backbone of scalability. Fast forward to 2025, and our roadmap has evolved into a multi-layered strategy that integrates global standards like KYC, Know Your Customer, KYB, Know Your Business, AML, Anti-Money Laundering ISO 20022 for financial interoperability, and now, crucially, MiCA markets in crypto assets in the EU. We're not just checking boxes, we're embedding these into our protocol, SDNA. At the core is our KYC system, which we V-scaled to over 15 million verified users out of our 60 million pioneers, with a target to hit full coverage soon. This isn't your average ID check. It is a community-driven human power process, augmented by tech partners like Yoti, aligned with FATE Financial Action Task Force. Guidelines why human-powered. Because AI is advancing too fast, deepfakes and bots could undermine trust if we relied solely on automation. Our KYC uses social graphs, your trust circles, as cryptographic primitives to verify humanity, preventing Sybil attacks while complying with privacy regs like GDPR and CCPA. We've extended deadlines like the recent push to February 28, 2025 for the second migration wave to ensure fairness across 190 countries, accounting for regional hurdles like document access in developing nations. Building on that, we've introduced KYB for businesses in our ecosystem. Every app or merchant integrating with Pi, whether it is a DeFi tool on our App Studio or a real-world vendor accepting Pi for goods, must undergo KYB. This verifies legal entities, ensures they read not shells for illicit activity, and aligns with international standards. Think of it as extending KYC to the enterprise level. It fosters a professional ecosystem where pioneers can trust the services they use. We've already seen thousands of apps go through this, from payment gateways to NFTs, all while maintaining our zero ICO zero premium model to sidestep SX scrutiny that plagued projects like XRP or Luna. AML is the third pillar woven into our consensus mechanism. Using our Stellar Consensus Protocol SCP variant, we monitor transactions for red flags, unusual patterns, sanctioned addresses without invading privacy. On-chain data is pseudonymized, but auditable for regulators. This isn't T-reactive, it is proactive engineering. For instance, our backend in Rust flags anomalies in real time, integrating with tools like Chainalysis for deeper forensics if needed. And let us not forget ISO 20022 compliance, which we activated on November 22, 2025. This standard, used by SWIFT and major banks, allows Pi to interoperate with traditional finance, think seamless cross-border remittances, or bridging to CBDCs, central bank digital currencies. We're repiloting this in Southeast Asia with central banks, testing low-cost transfers that could rival XRP or Stellar XLM, but with our mobile-first edge. Now, the big news from late 2025 are MiCA filing. On November 19, we released the MiCA Compliance White Paper 1.1, a comprehensive disclosure aligning Pi with the EU-S markets in crypto assets regulation. MiCA, effective since 2024, mandates KYC, ESG, environmental, social, governance reporting, white papers for transparency, and stable reserves for assets. Pi, S low energy use, 0.00003 kWh per transaction, meets EU green benchmarks, avoiding the carbon footprint pitfalls of proof of work chains. This filing isn't just paperwork, it as a signal to exchanges like OKX Europe, where due diligence is underway for a potential listing. We also explored as safe harbors, with rumored Wyoming DAO filings to navigate SEC rules under the Genius Act signed by President Trump. This act standardizes KYCC, KYBB, AMAL for stablecoins, requiring 100% USD backing and monthly reporting, principles we've anticipated since inception. Our Q4 2025 to 2026 roadmap amplifies this. Remittance expansions, merchant partnerships, and exchange listings all hinge on regulatory clearance. We're not dodging regs like some projects, we're redesigning around them. For example, our DEX decentralized exchange rollout includes built-in compliance hooks for fiat on ramps, ensuring users in regulated markets like the US or EU can trade without friction. We avoided ICOs to prevent classification as a security, focusing instead on utility Pi as a medium for real transactions, not speculation. So why pursue compliance so aggressively? Pioneers in my engineering mindset, compliance is like fault tolerance in a distributed system. Without it, the network crashes under load. Crypto S history is littered with failures. FTX collapse, Terra S implosion, endless SEC lawsuits because they ignored regs. We seek compliance to build trust. With 65 million users across 200 plus countries, Pi isn't a niche experiment. It is a global network. Regulations protect users from fraud, money laundering, and volatility. Our KYCKYB AML trio acts as an economic immune system. As one pioneer aptly put it, ensuring only real humans and legit businesses participate. This prevents pump and dumps, preserves scarcity. Our having post 100 M users is meaningless without verification and makes Pi compatible with real economies. From a tech perspective, compliance enables scale. Without it, we'd be isolated. No bank integrations, no major exchange listings, no institutional inflows. Look at Bitcoin. Its ETF approvals came after years of regulatory wrangling, unlocking trillions in capital. Pi, S mobile mining democratizes access, but compliance bridges the gap to mainstream. In an AI era where bots could flood networks, our human verified approach counters that, aligning with emerging laws like MiCA, SESG mandates, or the Genius Act S transparency requirements. We not just compliant, we future-proofing against quantum threats or CBDC competitions. Moreover, compliance is ethical. As founders, Changdiao and I believe in empowerment, not exploitation. Scams prey on the vulnerable. Pi, as zero-cost entry and compliance focus protect them. We've seen pioneers in Africa or Asia use Pi for remittances. Compliance lets us expand that safely, piloting with C banks to cut fees that trap people in poverty. It's as not about pleasing regulators, it's as about sustainability. Unregulated crypto faces bans, e.g. China, as crackdowns compliant ones thrive. Now, the impact on Pi is future profound and multifaceted. Short-term, compliance accelerates adoption. Our MiCA filing could lead to U listings by Con 2026, boosting liquidity and price stability. Pi is trading at 0.24 USD now, but with OKX or Binance integrations, analysts predict 0.6 by mid-2026, driven by real demand. Institutional investors wary of non-compliant assets will flock, think BlackRock-style ETFs for Pi, Unlocking billions long term, it positions Pi as a layer 1 powerhouse. Our CP consensus with sub-second finality and low energy rivals Solana or Ethereum, but with built-in compliance. This means easier DeFi integrations, Pio stablecoin, pegged one-to-one to USD with transparent reserves, could rival USDT global remittance markets. Worth 800 BIB annually. A ripe compliance lets Pi undercut Western Union, as fees especially in underserved regions. By 2030, Pi could underpin micropayments, rivaling Visa, but decentralized ecosystem-wise. Compliance attracts developers. Our App Studio AI powered for low-code dApps sees thousands building. Compliance ensures they can monetize globally without legal fears. Pi domains for decentralized e-commerce. Compliant KYC makes them trustworthy for real trades. Node runners earn rewards securely. With governance DAOs buffered by regs, price impact, stability over volatility. Compliance reduces dumps locked holdings until 2027. Verified users. Fostering hodl culture currently around 2 billion US dollars could hit 10 billion US dollars with EU-US access. But value isn't T just price, it's utility. Compliance enables Pi in Starbucks e-wallets or NYC vendors, bridging wealth gaps post-pandemic. Challenges, yes, navigating varying regs, e.g. US SEFS. EU MiCA requires agility, but our phased approach in close to open mainnet iterates safely. Community meetups in Austin or NYC build local compliance awareness. Pioneers, compliance isn't a detour, it's the highway to mass adoption. We're re-engineering a people, as network, secure, inclusive, enduring. Join hackathons, run nodes, complete KYC together. We LL code the future in code and consensus. Thank you.